My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make you some money. My job's not just to entertain, but I am teaching you tonight. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Tech companies never call it slowing. You know what they call it? They call it optimization. It's a dreaded term. It's the kiss of death for any high-flying tech stock. Customer optimization means missed quarters, blown revenue projections, and heartbreak for shareholders. Those worries drove the Nasdaq into a seemingly endless abyss for weeks on end this fall until the index came roaring back last week. Now, you know that many people considered last week's rally a one-hit wonder. I bet to disagree in a totally bullish fashion because it just keeps getting better for tech. This morning, in a total surprise, no one was looking for this, a small enterprise software company with a funny name, Datadog, changed the bearish tech narrative into a bullish one. What did Datadog do? They told us that the optimization process, where orders had gotten much harder to come by, is moderating. That statement and the accompanying strong numbers from this little company, well, okay, it's, it's 23. Let me just check, because I think the idea of calling it little is something that possessed the media today. Oh, look at this. It's a $33 billion company. Its news sent the stock up a stunning 28.47% today. And the pin action shocked everyone, especially legion of short sellers who've been printing money by betting against tech stocks for months. And that's how you get a day where the Dow advances 57 points, S&P gains 0.28%. But the Nasdaq, filled with companies that were worried about optimization, shot up 0.90%, almost 1%, with some huge gains among the biggest tech companies that you are so used to, and I hope you do own, keyed right off of little Datadog. So who is this Datadog to dominate the action? Is it like, I don't know, my dog Ragu? Is it like my dog Tony? Some of the other dogs I've been seeing around, like Riggins, by our research director, Ben Stoto? No, it's a company that sits in the middle of an important tech segment by virtue of its work in what's known as software development, security, and operations, or, as they cognoscenti say, DevSecOps. They actually call it DevSecOps. Can you believe it? Technically, Datadog helps its clients observe how its applications are performing and secure their data. I know, sounds narrow, but in reality, this company told us that while there had been indeed a moderation in tech spending that was hurting all of tech, that moderation, they are declaring, is petering out, if not over, especially when it comes to anything touching on, yes, you guessed it, AI, artificial intelligence. Buyers took this to mean that Amazon and Microsoft, great allies of Datadog, have probably seen a similar surge in orders, as has Google Cloud. All of Datadog's known partners, companies like ServiceNow, companies like Meta Platforms, companies like Shopify, they saw their stock surge too. And then by midday, almost all of tech got caught up in the rally, including those only tangentially related to Datadog. Apple up 1.45%, Broadcom up nearly 2%, Salesforce up 2.1%. These stocks were no doubt heavily shorted. Sell. And now those who are short are being crushed. Sell. Sure, you can say, Jim, enough already with the short sellers, but you need to know that a lot of the so-called smart money was indeed betting against tech, figuring that the optimization, the elongation of sales cycles, the attenuated order process, how do they come up with all these euphemisms for, like, business stinks? They were going to take a turn for the worse, not better. Now, the shorts did have history on their side. They're not a bunch of bozos, let alone chowderheads or mountebanks. See, normally a small slowdown turns into a big one. It's the natural order of things, at least typically. But these are atypical times when it comes to huge secular trends like artificial intelligence and cybersecurity. Enterprises can't keep up if they don't spend on these issues. They have to. It's existential if they don't. The stakes in security remain incredibly high. As we get a new hack almost every day, today there was a data breach at Las Vegas Sands. Plus, you need artificial intelligence, and you need to monitor sites to be sure they aren't being infiltrated. And that's right, again, in Datadog's sweet spot. Datadog didn't point blank mention many customers, but it did point out that a major fintech company, a chain of convenience stores, and a Fortune 500 company all signed big contracts, and I mean huge, this quarter. Okay, so you could argue that Datadog alone couldn't ignite such a gigantic rally. You need more to get tech running like it did today. And there is more. The bond market. Rates came down again today because the Treasury Department raised a lot of money by selling for 3-year notes for 4.5%, which is a far cry, by the way, from where people thought this would trade. Something maybe like 5% because people didn't like bonds last week. Now people buy this piece of paper at 4.5%. Why? Because they think short-term yields have peaked and the Fed's done raising rates and may actually have to cut them, something I doubt will happen. But it could be in the cards. I'll have more to say about inflation later in the show. I think they're winning the war, just for the record. But I want to go back in time. And this is really important because it shows you what's really at stake here for you and for me. I mean, really at stake. I'm going to go back to last Tuesday, the day before we had a 500-point rally. The day after, remember, we had a 500-point rally in the Dow Jones on Monday. And then beginning on that Tuesday, 1 week ago, so many seemingly smart people argued that there was simply no reason for the stock market to have soared higher Monday, other than we were oversold and due for bounce. End of the month selling, shorts too early, blah, blah, blah. We heard that all week as this market ground relentlessly higher. There was a skepticism that anything had really changed. How much research say hasn't changed, hasn't changed, hasn't changed. People assumed that whatever was bad was probably going to be worse, and the experts stressed that paying up for any stock in that environment was just silly. Once again, I have to hark back to what I call the billionaire strategist media complex. It never wants to admit things could ever get better, especially when we have two horrendous wars, an outright military adversary in Iran, a huge budget deficit, a feckless Congress, and the likely Republican nominee for president who seems to be pursued by prosecutors everywhere you look. But a lot of that's either unrelated to the market or already baked in. Me, I've always said the same thing to you. Sometimes you need to recognize that there are lots of bad things happening all the time, and yet the stock market can still rally. The world has always been a perilous place since I was born. Disappointment abounds. The center always seems like it won't hold. The blood-dimmed tide never goes away. But what does that have to do with the price-to-earnings multiple of the hyperscalers, Amazon and Microsoft? What does it mean when Datadog has a giant upside surprise? You may want to think stocks should trade off of geopolitics, but that would be the stock market trades off the fortunes of individual companies and the much larger bond market. Right now, they're both going in the direction of the bulls. This observation is incredibly important because, as I said yesterday, the bearish billionaires, overpaid strategists, and their sycophant lapdogs in the press have coalesced around the idea that stocks are just too dangerous for you to own. They don't want you in stocks. They want you in CDs. They don't care about you. They've created a shroud of doubt about everything, and it can't be removed or even ripped. And that's even as yours truly tries the rest of his life to do that. But what are they missing? Let's do that. Let's step back and say, okay, well, listen, Cramer's a wise guy, but what are they missing? It's simple. They don't know the difference between a Datadog and a down dog. They don't know DevSecOps from Black Ops. They think AI is overblown and large language models are like NFTs. They can't get their arms around any of this because that would mean they would have to get their hands dirty in a bowl of MongoDB, another company that sits at the center of the enterprise software revolution. This stuff is what they dismiss as too granular, too small for them. I'm too small for them. The billionaire strategist media complex is very strong. But let me ask you, not unlike Stalin when he asked about how many divisions the Pope had, how much money do these people manage every day? The answer is they have less impact on stock prices than you think. The billionaires are in bonds. The strategists, for the most part, have dug in their negatives' heels, and the media abdicates all responsibility. They always do. Yes, they are excellent, though, at amplifying the bearish feelings of the other members of the Saturnine trio. Me, what do? I read the darn tape. Meaning I look at what stocks are popping on the ticker crawl in the morning. It was clear a few minutes after 7 a.m. that something was going on with the Datadog. You had to be curious, examine what Datadog had to say. You couldn't be dogmatic, trapped in negativity. I like that, dogmatic Datadog. You had to believe in bowling, meaning the pin action that could come from hitting the front pin of the tech phalanx. To me, the bear strategists should convert while they still can. But how can they do that? These guys are big-picture thinkers. They aren't going to pick up the Datadog file, for heaven's sake. They're not going to talk to anyone at Amazon or Google or Meta or anyone else, because in the end, they just talk to each other. That's right. They talk to the twins, the media, the billionaires, and the other top-down commentators, all of whom say this rally has to fizzle because, well, isn't that what the smart money's saying? Bottom line, sometimes the so-called smart money can be real stupid. They know nothing! I think last week was a transformational moment for the stock market. I've said that every single day, and if you haven't changed your mind to adjust to the new reality, I do think there's a chance you could be left behind. Oh, there'll be declines, but tomorrow, I don't know. But increasingly, those declines will spur more buying than more selling as we go to the end of the year. I'm going to Robert in New York. Robert.
Jim, I'm up in Saratoga, New York, and I got to tell you, you do make people money. You're a booyah person.
There you go. Thank you. I mean, at least I'm trying. I mean, isn't it better if I come out here every day and say, hey, the 10-year's bad, you should sell everything? I mean, you know, what
exactly.
Aren't we supposed to try to help? What are we supposed to do? Just be like, hey.
You couldn't have said that any better.
You don't need a weatherman to know which way the wind blows.
Exactly. You didn't say pull it all out and let it go down the tubes. You knew it was coming back. Okay, but
yes,
anyway, let's talk about Jim.
Yes, I did.
Jim, you have I know a firm's reporting their earnings. We're not going to talk about that, but that's a real good stock. But you got Pinterest. You got a great quarter.
You buy Pinterest right here. You buy Pinterest. Well, you're not going to get a fight from me. I think Pinterest is doing everything right. They got that new CEO. He's a smart fella, and I do think that the site is kind of benign. It's kind of like my younger daughter would look at a Pinterest. Let's leave it at that. All right. I think last week marked a transformational change for the stock market. And if you are too busy following the so-called smart money, well, let me tell you something. You're going to be left behind. On Mad Money tonight, after logging the best week of the year last week, could the averages continue to move higher, or will, like the NASDAQ, fizzle? I'm tackling the technicals, find out what's coming. Plus, from Arizona to Ohio and all over the East Coast, you want to read on retail? How about we go to Tanger? 14 million square feet of it. I'm talking to the CEO after earnings. But first, 1 in 5 Lockheed Martin employees has served in uniform. And as we approach Veterans Day, I'm sitting down with the CEO of the company to find out how it continues to support those who protect and serve. So I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.